Welcome to the Sazmining Podcast. At Sazmining, we are bringing you into conversations with today's industry leaders in blockchain and cryptocurrency. Our goal with this podcast is to improve the understanding and adoption of blockchain and cryptocurrency by giving you an insider's look at what's being built and informed predictions on what the future holds. Today's episode is sponsored by BlockFi and Cogent Law Group. Our listeners can visit blockfi.com/sazmining for an exclusive offer for cryptocurrency management. And check out Cogent Law Group for all your legal needs. Rafael Cosman is the CEO and co-founder of TrustToken, makers of the world's first compliant, independently attested digital dollar TUSD and 4 other global fiat-backed stablecoins. Prior to TrustToken, Rafael helped build StreetCode and has also worked at Google Brain, Palantir, and Kernel. And in his free time, you'll find Rafael reading or surfing. Welcome, Rafael.
Thanks for having me, William. It's good to be on the podcast.
Yeah, I'm extremely excited to have you on and to talk with you today because you're actually the first person that we've had on the podcast who's deep within the stablecoin world. So I'm sure we'll dive into that later on. But to start, could you just talk a little bit about your journey up until this point and what led you to what you're working on today?
Sure. I got into coding when I was young and studied CS at Stanford. And after I graduated, after spending a little bit of time working, I decided I wanted to start a company with my friend. And we started the company that ended up being TrustToken, the makers of TrueUSD. And when we started the company, it was originally an estate planning company. So we made software that makes wills and trusts. And then about a year into the company, we saw what was happening in crypto and decided, wow, we definitely need to be in a different business. And we particularly saw the growth of Tether. And I think at that time, Tether might have been passing, maybe it was like $1 billion or something like that. And now, of course, it's $10 billion. But we thought, wow, it's crazy that a product like Tether can get so big, and yet it's still has a pretty negative reputation. And isn't that compliant with international regulations? And so we thought, wow, there's a big opportunity here, clear demand for a product like Tether, but they've left the door open to do it in a much more trustworthy way. So we launched TrueUSD, and the rest is history. Since then, TrueUSD's grown a lot. It's about $300-something million in market cap right now, and we've got 4 other stablecoins that we've launched as well. True Australian dollar, Canadian dollar, Hong Kong dollar, and British pound. And we're now coming out with a product that we haven't talked about very much publicly yet because it's still in the works, but it's probably going to be launching in the next month or two. And it's called TrueFi. And it's a DeFi protocol for doing uncollateralized lending, which is a pretty novel thing because almost all of DeFi, as you know right now, whether it's Aave or Compound or Maker, almost all of these systems do over-collateralized lending, and that's how they can be trustless. But how to do uncollateralized lending in a trustless way, or at least a low-trust way, that is very much an open problem. And we think we have at least part of the solution with TrueFi.
Yeah, well, that first off is quite the pivot that you made from what you were doing before, and then like every great entrepreneur, you saw the opportunity and dove right in. So that's amazing. But I guess to lay the groundwork for a lot of the things that we are going to dive into today, I actually didn't know about that product launch that was coming up, so I definitely want to dive into that later on. But just to start, could you talk a little bit about stablecoins, what they are, why they're important, and how you guys built your own stablecoin?
Yeah, absolutely. So stablecoins are price-stable cryptocurrencies, and they're very important for crypto. In fact, they now make a very significant chunk of total crypto market cap and trading volume. Tether or another stablecoin is on one side of a very large fraction of all trades. And the reason for that is because people want to have their money in crypto for all the obvious reasons. They want to be able to send it around the world almost instantly. They want to be able to hold it on all kinds of different apps or wallets or exchanges. They want all the advantages of cryptocurrencies. They just don't want the volatility. And that has been a perennial problem. And Tether and our product TrueUSD and USDC are three of the major fiat-backed stablecoins. So they achieve price stability by backing the token by US dollars. There are other models, and the best known one is Maker with DAI. DAI is a stablecoin that is pegged to a dollar, but it's not backed by actual US dollars. It's backed by over-collateralized Ether and other crypto assets. So you can lock up $1.50 of Ether, and then you can mint a DAI. And that's how the system is always collateralized. And it's a bit more complex than just having fiat reserves the way that TrueUSD does, but it also can be potentially more trustless because you can see everything that's going on directly on a smart contract. There aren't any banks that are operating off-chain that you have to rely on. So those are two of the big models right now. And we think that there's a lot of potential both in under and uncollateralized lending on-chain. So there's a new product that we're developing there called TrueFi. And we also think that there's a lot of potential for stablecoins that are not based on the US dollar. Right now, almost the entire stablecoin market is about the US dollar, and that makes sense because the US dollar is one of the most trusted financial products globally, and it is the coin of global trade. But there are a ton of crypto users that are coming from Australia, from Europe, from Asia, from South America that have local fiat currencies that they want to be able to on-ramp easily into crypto. And they would love to be able to see, when they're buying and selling Bitcoin or Ether or other assets, they would love to see those denominated in true Australian dollars rather than true USD. And so this we think is going to be another major wave for stablecoins, assets other than US dollars. And that's something that we're pioneering as well.
Yeah, and that's one of the interesting things as well, how the most common one that everyone sees is how the stablecoin pegged to the US dollar. There are multiple different types of stablecoins. And at least for people who aren't fully within that realm of working on stablecoin projects or everything else, it's kind of difficult to assess one stablecoin from another. So could you talk a little bit about what some of those differentiating factors are between, for example, your stablecoin versus another stablecoin like Tether or any other type of stablecoin that's out there?
Absolutely. The biggest thing that we've focused on, because we were the first stablecoin to launch after Tether, the first fiat-backed stablecoin, and the biggest thing we focused on is trust and transparency, just to differentiate ourselves from some of the issues that Tether had been facing. And we do that in a couple of ways. One is that we're the only stablecoin to have real-time 24/7 audits. And it's a pretty technology. We partnered with an accounting firm, a top 50 U.S. accounting firm, to do that. And they connect directly to our banking partners and pull the information about the U.S. dollars that are backing TrueUSD. And then they actually host on their website a data. So that's one way that we try to differentiate ourselves. Tether was having a lot of complaints for not being audited at all, and we went to the other extreme and said, let's set up a system where we'll be the first stablecoin to ever be real-time audited. And we're actually now working on a project with some of the Chainlink oracles to be able to take that information about the collateralization of TrueUSD and actually put it on chain so that DeFi projects and smart contracts can know that TrueUSD is collateralized, and they can get a price feed or a data feed from an oracle showing that level of collateralization. And they could have certain kinds of stop losses or triggers if that collateralization level were ever to fall.
Got it. And another question that I've been wondering about recently is you hear a lot of different governments who are thinking about issuing their own digital currencies. China's been talking a lot about it, but there's also the potential that the U.S. government might at some point go and try and create their own type of U.S. dollar coin, stable coin, whatever it might be.
Could.
Yeah. And in that type of a world, what happens to projects such as yours or Tether or any other project that's tied and pegged directly to the dollar?
Well, so it certainly could. We certainly could see in the next couple of decades some major government-backed stablecoins. The U.S. government is evaluating it, but it's very unlikely that anything would happen within the next couple of years, just because things like that move very, very slowly. Even with Libra, just being a large company, the amount of back and forth that has to happen with regulators is massive. And so if the Fed or the U.S. Treasury wanted to issue something similar, a U.S. dollar stablecoin, it would be years and years and years of discussion and design before it happened. I do think the Chinese are going to move more quickly, and they are actively working on a renminbi, a Chinese yuan stablecoin. But I think that there will still be a place for companies such as ours, even in a world where there are more government-backed digital currencies, because we're focused on connecting assets to the blockchain. We've got 5 currencies so far. USD is just one of them. And down the road, we do think that blockchains are going to be a place where hundreds of different assets are traded. And a lot of the infrastructure that's being built today in DeFi, the best application of it will actually be when more real-world assets are put into these protocols. Because if you even look at DeFi today, many people don't realize the extent to which stablecoins really are the killer use case for DeFi. Just as an example, the other day I was looking at the numbers for Compound, and I'm sure your viewers are familiar with Compound and Aave. They are protocols for doing lending and borrowing on the blockchain. And on Compound, they list 9 different assets. And 2 of those assets that are both of them stablecoins, those 2 assets, when I looked at the numbers just recently, corresponded to 93% of the total amount of borrow, to the total outstanding borrow from the Compound protocol. And it's not just Compound. We looked at Aave as well, which is another one of the major lending and borrowing protocols on the blockchain. And it was very, very similar numbers. About 92% of their total borrow was from stablecoins. That means all the other cryptocurrencies all combined on Aave and Compound were making up 7 or 8% of the borrow, and stablecoins were more than 10x everything else combined in terms of actual demand for borrowing. So that's very indicative that these assets are some of the most interesting assets for crypto and for DeFi. And you do need things like Ethereum, which provide the basis for assets like TrueUSD and other stablecoins to be traded. But when it actually comes to usage in DeFi for everyday people that want to earn 3%, 5% on their stablecoin holdings, these non-volatile assets are actually much more interesting.
Yeah, and I think that's a good segue into the product that you were talking about earlier. Can you talk about how TrueFi works?
Yeah,
I like the term, by the way.
Thank you. So TrueFi is a protocol for uncollateralized lending. So the way that a lot of these things like Compound, Aave work is that you can put up, let's say, $1.50 worth of Ether, and then you can borrow $1 of TrueUSD. That's an example of how it works on Aave. And that's an over-collateralized loan because you're putting up $1.50 in collateral for a $1 loan. Now these products have gotten a lot of traction, a ton of interest. Many of them have upwards of $1 billion that's been deposited with them, which is very impressive. And that is part of what spurred so much interest and growth in DeFi recently and all the new projects that are coming up. But over-collateralized lending is only a very small piece of the pie. To be able to reach a much larger set of users and also to be able to offer higher interest rates to depositors, we're going to need to be able to have uncollateralized or at least under-collateralized lending in DeFi. And that's what TrueFi is meant to address. So the way that it works is you're going to be able to put TrueUSD or other true currencies into a pool, and then borrowers can apply to be able to borrow TrueUSD from this pool at an interest rate. And there's going to be a network of token holders that are holding a special token called TrustTokens, which is going to be able to approve or reject these loan applications. So you can think about it as a little bit like a decentralized loan officer, where every holder of trust token is it's like one trust token, one vote. And you can vote for or against these loans, and the trust token holders are incentivized to only vote on loans that they think are actually going to do well. So they are the ones that are acting as sort of a global decentralized loan officer assessing these applications. In the future, we're going to start with just one pool, and it's going to be designed to be fairly low risk in that we're going to be only having a very limited number of borrowers. They're going to be very reputable funds that we're working with that are well-known names in crypto, have hundreds of millions of dollars under management. The very, very established players. But down the road, we're looking to open this up and have additional pools with different risk parameters. And some of them might be doing a larger number of smaller loans, and some of those might be defaults, but the other ones, if they have high interest rates, could make up for that. So that's where we see it going down the line.
That is such a fascinating application of blockchain technology. I mean, I'm piecing it all together, right? And so I guess my one question, I think it's really smart that you're starting with very reputable borrowers. I think this is an incredible product. I guess what happens, let's say I'm a token holder, right? And I am part of the voting process of whether or not we should approve this loan. How is that voting process actually taking place in real time if you're a token holder and you're part of that, I guess, underwriting decision, whether you're deciding, voting, yes, I want to give out this loan, or no, I don't want to give out this loan?
Yeah, so a borrower is going to submit an application saying, hey, we're a big trading firm. We want to get a $3 million loan, 11% APR for 3 months. And they submit that application. Then there's going to be a voting period of, let's say, 7 days or 14 days when the trust token holders can vote yes or no on that loan. And to be able to pass, they have to exceed a certain threshold, a certain percentage of yes votes. But anyone that votes yes on that loan, if the loan is approved, then their trust tokens are now going to be staked on it. And if they do end up paying the loan back, then anyone who voted yes on it and staked on it is going to get a bonus. So they'll get, let's say, a 5% or 10% boost on their trust tokens as a way to reward them for voting in this loan, which ultimately helped everyone, helped the pool and helped the whole protocol. But if that loan defaults, then they're going to have some or all their trust tokens slashed. It's going to be burned, similar to in proof of stake or other protocols. If you do something wrong and end up harming the protocol, you're going to have your trust tokens burned. And what that does is that creates the right incentives where now, if someone is very legit, if there's a very legit fund, they're very likely to repay the loan, then you're economically incentivized to a very large extent to vote yes on that loan. But if they're not legit, then voting yes is an extremely dangerous proposition. And this also serves to, in addition to creating those incentives, it also serves to weed out over time any trust token holders that are repeatedly voting on bad loans. They're going to lose their trust tokens, and they're going to no longer be a part of this decentralized network for assessing these loans. And we're going to be giving, the protocol is going to be automatically giving more trust tokens to people that are voting in a way that ends up being correct. So over time, that should shift the trust tokens to be distributed as well as possible to folks that are really adding value to the protocol.
Yeah. Wow. So you've even designed the incentives within that underwriting process to make sure that the right loans are getting approved over time. And it almost kind of, the way that I could see this playing out over time is that you're going to get more and more very knowledgeable people who would understand how to properly underwrite these loans, getting involved with your network because they're incentivized economically to really participate. And I can definitely see this snowballing to just becoming something that becomes more robust and gets used by more and more people.
That's the idea. And we do think that if you create the right incentives, you'll get the right behavior. That's one of the core that's one of the core good ideas that crypto really brought along into the world. Just, it's very much applied game theory. And also, there are things that you can achieve when you have a decentralized network, like all the trust token holders that we're going to be having globally, that you can't do if you're just one loan officer or a team of loan officers that are looking for these good loans to approve. You're going to be able to find things that an individual lender would never be able to find when you have a global network that's distributed and is all working together.
Yeah. And so when this launches, how are you building up, I guess, that base, the base token holders who are going to be participating right off the bat? Is there like a strategy behind that, or how are you going to scale up to reach those initial network effects?
Well, our goal is to distribute trust tokens quite widely, and this is a model that Compound and many other folks have been using quite successfully in the last few months, especially. So anyone that provides liquidity into TrueFi, that puts in TrueUSD, that TrueFi is going to be lending out, they're going to start earning trust tokens as soon as they put in TrueUSD. And that's going to help to bootstrap the liquidity of the protocol and get a lot of capital to come into TrueFi. But it's also, importantly, going to be putting the power of which loans the protocol is making in the hands of the users, giving those trust tokens to TrueFi users, whoever they are. They could be individual traders putting in $10 or $100 or $1,000. They could be big funds that are coming in. Whoever is putting TrueUSD in, that's where we're going to be distributing trust tokens. And then also, we're likely going to be incentivizing liquidity providers on other protocols as well. So like people that provide liquidity to our tokens on a Uniswap or on Balancer or other protocols like that, giving them trust tokens as well. So all the folks that are participating in the ecosystem and are providing value are going to ultimately be the trust token holders that are going to be approving or rejecting loans and deciding where that capital goes.
How did you bootstrap the project initially to get to the volume that you have today? You said about $300 million market cap. It sounds kind of crazy to think, oh, well, you pivoted and then all of a sudden you got that type of traction and had that many people buy into your stablecoin. Can you talk about how you made that process happen and you took the company through that leap?
Yeah, it's taking quite a while to get to this size where we've got $300 million in TrueUSD. TrueUSD's been around for something like 2.5 years now, and it has been a long, slow process to get to this size. I think the first, I remember when we launched it and we were at $5 million, and we were like, wow, there's $5 million in TrueUSD, and we got to $10 million, $10 million, and a lot of our growth in the first year or so, like over the course of a lot of 2018, was from just listing on major centralized exchanges. So TrueUSD is now traded on a lot of the big names of Binance and OKX and many other big exchanges in the U.S. and abroad. But then recently, in 2020, most of our growth has come from being supported on DeFi protocols. So things like Curve.fi, which is a protocol that actually supports trading between stablecoins. So they have a pool that has USDC and DAI and Tether and TrueUSD all together in one pool, and they provide liquidity between the stablecoins. So that protocol actually has driven a lot of our growth recently and is holding some very large chunk, maybe 100 million, something like that, TrueUSD. And it's been the popularity of DeFi that has really been the most valuable recently.
Looking at it from your perspective, what do you see as the next phase of stablecoins and of this industry? Right now, there's a lot of buzz around DeFi and all these different protocols, lending, borrowing, automation. But from your perspective, where do you think that this is all headed?
Good question. So I think that DeFi is in a bit of a bubble right now. But that's okay, because I do think DeFi has a lot of value long term. And so even after this wave goes out, another wave will come in down the road. The fundamental idea of DeFi building blocks, small recomposable pieces that you can make more powerful financial products out of, that is a fundamentally very powerful idea. And that is why I think that DeFi will win, or at least will have a very valuable role to play in finance. Yeah, I think it will have a large role to play in the future because the idea of DeFi building blocks is a very powerful idea. Small, composable protocols that can be used together to create all kinds of different financial products. That is a fundamentally powerful idea, and conventional finance does not have anything that can really compete with that. You can see that if you just look at it, even like, let's take something like Uniswap, which is a decentralized exchange, and something like Aave, which is a borrowing and lending protocol. So you can take something like TrueUSD and Ether, and you can put them into Uniswap, and then you can get LP tokens, liquidity provider tokens, that represent your deposit into Uniswap. And now, people can trade with that liquidity that you've put in. But then you could take those LP tokens, and you can go to a lending and borrowing protocol like Aave, which, if it supports them, you can actually then loan out those LP tokens. And so just the way that you can take these protocols and combine them together to create new things it's very powerful. So one trend that we're betting on is from over-collateralized lending to under and uncollateralized lending. That we think is going to be a big one. Second trend that we're betting on is that a more diverse set of stablecoins is going to power the next few years of DeFi, and most people are not really realizing the extent to which DeFi today is overwhelmingly driven by the use of stablecoins. I think actually the 2020 explosion in DeFi that we're seeing could not have happened in 2017 because there weren't the stablecoins that were necessary. There was basically only Tether at the time, and DAI was just getting started. But at that point, I think you could not have had the proliferation of DeFi protocols that we're seeing today. You got to have a much larger number of different stablecoins to use, and we think it's going to go a lot beyond just USD and other currencies and other assets in the next few years.
From the standpoint of someone who's, let's say they understand DeFi, they understand not only the mechanics of it, but they actually think that it's a good idea, it's where the future's headed, but they are in the crypto space, but they're not actively participating in these different types of protocols. What would you say to them at this point in time if they're not actively participating, but they want to get involved?
I would say get your hands on some stablecoin like TrueUSD and put it in something like Aave, which is a very trusted protocol with something like $1 billion of deposits already. And that's a great way to get some exposure to it, try out DeFi, and you don't have to be hopping on the latest degen craze to be, just earning a good interest rate and getting some benefit from DeFi. But also, I'd say to a large extent, we're still building stuff. Like it's going to probably be a couple more years before we've got applications that are ready for the big leagues, for having, hundreds of millions or 1 billion plus users come in and start to take advantage of what we've built. And so in some sense, everyone in crypto right now is still an early adopter. And we're going to get to the point at some point where crypto is like the internet. It's like TCP/IP, where everyone's using it, but only 1% of the population or less really understands how the thing works, and that's okay. Yeah. That's in some sense as it should be, right? A lot of us drive cars, but only a tiny fraction of people actually know how to fix one. That's fine. So crypto will get there, and it's going to take several years, but it's going to be big when it does.
Yeah, I definitely share that type of a view where I think that if you really want to reach mass adoption, you want to build products that are so good and compelling for people to use, and they don't even need to know that there's a blockchain aspect to that product. They're just using it because it accomplishes or solves whatever problem that they're facing. And I think that the companies out there that are able to build those products and find that product market fit and serve customers the best are really going to see the fruits of their labor later on. But right now, they're all building.
Exactly. Yeah. And I think that we're going to get to the point where, so crypto is, it's internet money. I think it's a good way to think about it. It's internet money. And there aren't that many different things that one does with money, right? Like you invest it, you save, and you earn an interest rate, you spend it, you should be able to, send it to other people and other businesses. Basically it. Like, those are pretty much the only things you do with money. That's what people mean when they say money is commoditized. It's just one investment product or another, or one interest rate or another. These products aren't that unique. And so the way that crypto is going to win in the world of money is fairly simple. It already can be sent to anyone, anywhere in the world, 24/7, almost instantly, and fairly cheaply. That's a big deal. That's a big level up compared to like sending an international bank wire. But I think that the thing that DeFi is developing right now that's going to really make crypto more competitive in terms of becoming a part of more people's lives is being able to offer a higher interest rate. So there's going to come a time when you're going to open up your banking app. You're going to open up Robinhood or PayPal or your Chase app or whatever it is, and instead of earning 0.01% like I am right now in my Chase account, you're going to be earning 2% or 3%. And this is going to be for everyday consumers, folks that have little understanding or knowledge of crypto, but crypto is going to get to the point where these protocols are so established, they're so trusted, they've been around for so many years and have not lost people's money. And you're going to have something like Aave, something like Maker be involved in a conventional consumer finance app like a PayPal or a Square. And someone's going to have their high yield account in there, earning 2%, earning 3%, and it might have a little disclaimer saying like, hey, we use crypto when we use the following DeFi protocols to earn this interest rate, and they may not really understand it, but there's a lot of things that banks do with people's money that they don't understand anyway. The thing that matters is that it's actually low risk, and we're very far away from established fintech companies or established banks feeling comfortable with these types of crypto products for their consumers, but we're going to get there. And every day that goes by, that stable coins like TrueUSD are still stable, still worth $1, and protocols like Aave are still solvent, still haven't lost anyone's money. Every day that goes by, these things are earning trust, and they are continuing to provide returns that systematically beat what you're making with conventional banks and conventional U.S. dollars. And so that edge is what's going to ultimately win. That's what's going to ultimately increase crypto's total market share when it comes to global money.
Well said.
Thank you.
You need like the mic drop after that. Yeah, that's awesome. And so my question is, how is the treasury management of very large public companies going to change over time? Recently read about how I believe the name is MicroStrategy. They made it part of their treasury management plan to, rather than holding U.S. dollars, they just bought a bunch of Bitcoin, and they're saying this is how we're going to protect some of our money. And I have a prediction that over time we're going to see more and more institutions just have Bitcoin as part of their investment strategy, part of their reserves. And I think that really when people are going to look back and say this accomplished what we saw that was possible and accomplished everything that everyone in crypto has been talking about, is when every single country around the world has a part of their treasury held in Bitcoin. And at that point, I think that the value of one Bitcoin is going to be astronomically high compared to where it is today.
Yeah, I somewhat agree, somewhat disagree. I think we are going to at some point see very widespread use by governments and large corporations of crypto, I don't know if it's going to be Bitcoin. I'm a lot more bullish about crypto in general than I am about Bitcoin specifically. And the reason for that is I think Bitcoin is likely always going to be very volatile. And if we're trying to convince a big corporation or a government to put money into crypto, I think our strongest bet is going to be if we can say, look, we've got things like stablecoins that have been around for years and have been completely stable and are fully backed, and you can really trust them. They're rock solid. And we've got protocols in DeFi that have been around for years and have been holding billions of dollars and are very, very solid and are completely audited. And you can earn an interest rate on these DeFi protocols that kicks the butt of whatever you're earning on normal US dollars. That, I think, is going to be, I think that's a much more reliable sell for us as an industry if our goal ultimately is to close corporations and governments and banks and convince them that they should be using crypto. And the two things we have to work on are reality and perception. And right now, the reality is pretty decent. You know, if you look at the best protocols and you look at very trustworthy stable coins, you know, these things are reliable and they provide good interest rates that really are a lot better than what you get on the US dollar. And the perception right now is still lagging behind that. And that makes complete sense because it's still only been a handful of years that these things have been around. Once we get to 5 years, 10 years, 20 years, then it's going to be a lot harder to argue that these things are going to, they're going to suddenly implode. Well, okay, if they suddenly implode, why didn't they implode any time over the last 2 decades that they've been around? You know, that's where, you know, Bitcoin has established a track record of security, which is why people are very confident that the blockchain is not going to get hacked, but it does not have a track record, and it probably will never have a track record of stability. And that's what I think a lot of folks want. So yes, they might decide, yeah, I want to put a little bit of my portfolio into Bitcoin and take a flyer on it, and I think it might go up, might go down, but I don't think that that's going to be I don't think that that's ever going to be a reliable sell where we can say, look, we as an industry have a set of products that are just better than whatever you've got right now, and you should be using them. And if you're not convinced, then give us another year, give us another 2 years, give us another 5 years. You'll be convinced because we're going to keep performing at a level that you will not be able to deny.
Yeah, that's interesting. I'm really glad we started diving down this rabbit hole because I never included that part within that prediction as well. I wasn't thinking about how stablecoins would also become part of it. I'm a little bit more disconnected from DeFi, as I'm sure you are, compared to you, because you're building in it every single day. And I can definitely see that being part of the future that's outlined in how this space continues to grow and we see government adoption. I mean, the way that you laid it out, that definitely makes sense. The one other piece that I would add on top of both of what you just outlined as well as what I just outlined is, from a government's perspective, you're looking at a couple of different variables for each of these. So you outlined a great reason why there would be a growth of stablecoins and other types of protocols that they get involved with. I think that from the Bitcoin point of view, one of the powerful aspects within that is the decentralization that is built into the protocol and the distribution of the hash power, for example. So just as what we saw recently happening with all the different central banks and printing of dollars out of thin air, in a sense, that's something that you can't do with Bitcoin, for example. It's got the most transparent monetary supply of any currency, in the sense that you know exactly how much is going to be mined, you know when the next distributions are going to be made, you know how those distributions are determined, how much Bitcoin is being given out per block, and how every 210,000 blocks, that reward being paid out to the miners is cut in half. And I think that that's one of the reasons why I could see kind of combining both what you just outlined and kind of what I thought previous to this conversation, I could see governments actually in the future getting exposure to both, whereas you have one in Bitcoin where you have the decentralization aspect, and then you have these protocols and these stablecoins that have proven themselves over time to be reliable, and another place where finance continues to evolve to.
Yeah, I think that Bitcoin and similar coins will have a role to play. And there's no question that decentralization is valuable. And if we were in an apocalyptic scenario and the financial system was melting down and, people were rioting in the streets and the US dollar was crashing, in that situation, I think Bitcoin would be crucial. And it might be one of the best investments, one of the only forms of money that one could depend on or could use in a truly apocalyptic scenario. So I do think Bitcoin has a tremendous amount of value there. I think we're going to see, the future of crypto. I think it's going to be a mix of purely digital assets like Bitcoin and tokenized real world assets like TrueUSD or TrueGBP. But also, if you look at what is actually getting traction and growing over the long term, Bitcoin is right now trading at something like 10K, some pretty significantly lower than its peak in 2017, and it is going to continue to be driven by hype phases where it pumps up and then depressions where it crashes down, and it may over the long term continue to go up from here, but I think it's not clear what the long term future is going to hold. But if you compare
I actually think it goes back to what you said earlier too, with like perception and reality, right? And so just going off of what you're talking about with Bitcoin, the price now is obviously much lower than the highs at 20,000, and I think that like the perception is outlined in the price, right? I mean, that's kind of what's driving it. It was 20,000, now it's 10,000. And then I think the reality aspect of it is by analyzing the hash power and what's been happening on the mining landscape. And what we've seen is an enormous increase in the amount of hash power on the network, not purely driven by the increase in sophistication of the mining hardware, where yes, we went from older generation miners to smaller nanometer chips, where you just have more efficiencies, you can have greater hash power. But the reality is that there's a lot being built on the mining front, and I think that's almost like a price floor that's helping drive baseline value to the network. People are still investing in mining.
That is to a certain extent just following Moore's law. In the long term, I mean, we moved from CPUs to GPUs to ASICs, but now that we're on ASICs, isn't it basically just going to follow Moore's law over time?
Oh, with the increase in I had a discussion.
In hash power?
Yeah, this is actually very interesting that we ended up here, because I had a conversation about this specific topic for like an hour and a half the other day with a few people who are in the in that industry. So we were talking about Moore's law, and we were having two guys who are far more technical than myself. I was more of like a fly on the wall for this discussion, but they're talking about Moore's law and is it dead? And one of the participants in the conversation was talking about how it looks like Moore's law is dead when it comes to these types of equipment. And the other guy was talking about how, although it seems like that Moore's law has been consistent since, I forget how many years, probably like 50 years or something like that, like a while. And he ended up sending over a video showing how Moore's law has stayed consistent over like the past 50 years. But recently in the phase that we've been in, we haven't seen that next huge jump. But if you just assume that Moore's law is going to continue, then we're going to see another huge jump in that hardware. And so I guess
the thing is, so I agree with you that Moore's law specifically may not continue to hold, because we're getting close to some of the actual physical limits here with 7 nanometer chips. I mean, It's really, really small. You can't get that much smaller. But because Moore's law specifically was about number of transistors on a chip. but
Yeah.
we're still seeing a lot of growth. It's just coming in other ways. Like we're having more cores per CPU, more cores per GPU. And so the actual dollar per flop might be a better metric. Like inflation adjusted dollar per flop, I think that's going to continue to drop, even if Moore's Law specifically is not holding.
Yeah, and I also think that definitely makes sense. Because it gets even like deeper than that too when you're looking at just the overall pricing of like when you're going from a 7 nanometer chip to a 5 nanometer chip, and how high in demand is that 5 nanometer chip, where if you're a manufacturer and you're thinking, okay, well, if I'm going to manufacture this ASIC and I have to pay this much to build a 5 nanometer chip, then it wouldn't necessarily be worth it because the demand for that 5 nanometer is too high, which also from like a miner's point of view, we're trying to figure out where the industry's going. And that's one of the things that is making it more difficult for there to be a huge leap in the next type of generation hardware that comes out that may be 5 nanometer. I mean, it's really hard to say exactly what's going to happen or if there's going to be a generational, like an enormous leap in Moore's Law with some other type of chip that might come out. I know that there are some companies that some of which I'm in very close contact with that are working on very interesting technologies that could have huge ramifications for compute power. And that's where I'll leave that. But it's really interesting to kind of see what's being built. And I guess no one really knows until you kind of get to that phase. But I do think that the future for Bitcoin is very strong. And I think that just similar to how you've set up great incentives with your protocol, and I think it's going to be a very great product. I mean, just after diving into it with you, I think that Bitcoin shares many of those characteristics, and it has many incentives that work for it in the long run. But then again, you never know. I could easily be overlooking one or two variables, but the way I see it, I think that Bitcoin's got a very strong future.
Yeah, I think that Bitcoin certainly can have a very strong future, but I do think that stablecoins are going to be an increasingly large share of overall what crypto is doing. Just if you look at the numbers, in 2017, while crypto today looks somewhat like 2017 overall, the growth of stablecoins are in a radically different situation. In 2017, there's basically one stablecoin. It was Tether, and their market cap at the beginning of 2017 was something like $15 million.
Really? I actually did not know that.
15 million.
Beginning of 2017.
That's right. While of course, crypto was at an all-time high. Bitcoin trading at, 17,000, 19,000. And then they quickly grew into the hundreds of millions and now into the billions. And today, they're about $9 or $10 billion in Tether. And you've got other stable coins like USDC, like TrueUSD, that have very significant market caps in the hundreds of millions. So that is just an unbelievable growth of the industry. And now people are looking both for equity-like products that could go up 10x, but also they're looking for more like debt-like products, which can go up 10%, but can be much lower risk. I do think that the changes in computing are very interesting, and that if we can successfully build quantum computers that use light instead of electrons, there's a lot of potential for what it could do to this industry. But I think even without changes in computing, that the amount that can be done just using smart contracts and blockchains as they're currently designed is still tremendous.
Yeah, definitely. I mean, look at how big the financial, the industry of just finance as a whole, everything runs on finance, and this is a better way to really build out that system. And your company is part of that movement of the companies within DeFi and crypto that are really trying to build the system from the ground up. That just takes time.
It does, yeah.
I'd like to thank BlockFi for sponsoring today's episode. BlockFi provides wealth management products for crypto investors. I personally hold my crypto with BlockFi. because they pay me up to 6.2% interest annually on all of my crypto holdings. At Sazmining, we've hooked up all of our listeners with a special sign-up bonus. All you have to do is go to blockfi.com/Sazmining and sign up. Again, visit blockfi.com/Sazmining for an exclusive bonus offer. It's a no-brainer to earn additional interest with BlockFi. Today's episode is also made possible by Cogent Law Group. Finding reliable legal representation in blockchain is one of the biggest challenges when building a business. You need to make sure that you work with a law firm that understands the legal frameworks that apply to the industry and has the ability to strategically help you grow your business. When researching law firms for Sazmining, I found that Cogent Law Group checked all of the boxes. Not only do their lawyers have expert-level experience, but they also understand the blockchain industry. Cogent Law Group gives you access to high-end lawyers without breaking the bank. Yeah, so I'm actually very curious for this next question I'm going to ask. It's non-crypto related, but
Okay.
What is your favorite book?
Ooh.
Are you a fiction guy, or are you what type of books do you read?
I read a combination of fiction and nonfiction. I like to balance it. I'd say, okay, my favorite nonfiction books are, I'll give you three, okay?
All right.
One is The 15 Commitments of Conscious Leaders. The 15 Commitments of Conscious Leadership. And it is a amazing book about how to lead and live. Another one is Getting Things Done by David Allen. You might have heard of that one.
Yep.
That's just that is the Bible when it comes to productivity. And final one that most folks haven't heard of, it's called Good and Real. And it is, I think, one of the best descriptions of how reality works at the deepest level, like what is likely going on at the very bottom of physics if you drilled all the way down. All three of those books are ones that have significantly changed how my perspective on the world. In terms of fiction, when I was young, I really loved Ender's Game. I'm sure.
Yes, that book
you get
is
that a lot.
Great.
It's a great book, very inspiring.
You're the first one that said it, actually.
Really?
No one has said Ender's Game. We've got Brave New World. We've gotten 1984.
Yeah.
Catcher in the Rye. We've got
all these highbrow books. Folks aren't being honest with you. But recently, my new favorite sci-fi author is a guy named Greg Egan. And if you're looking for something to start with, I'd recommend Permutation City. But he writes some very thoughtful and also what I think are some of the most realistic visions for what the future of humanity can hold. And I think that most people severely underestimate, even people in technology, I think, oftentimes severely underestimate the amount of change that we're likely to see in our lifetimes. Because you just extrapolate forward, I'm 27. I grew up with using floppy disks when I was a kid. We basically didn't have the internet back then. And just thinking about the fact that today we've got, crypto and Uber and Snapchat and a gazillion different things, what is the next, if I can reasonably expect to live for another 50 years as a fairly healthy American, what am I likely to see in my lifetime? It's crazy. And I think that part of the purpose of sci-fi, and Greg Egan does this particularly well, is to show us what that can look like if we build it.
Yeah, I mean, I completely agree. I think that people far underestimate the rate of change within technology and just how quickly people will adapt new types of technology. I mean, just like you laid it out right there. Just when you were younger, the internet was just yes, it was there technically, but it's not like it was used. I mean, today you couldn't operate without the internet. You couldn't operate without a smartphone. I mean, how quickly did that happen? How many years have smartphones been around? They've been around just over is it 10 or 20 years? 20 years? 10 years?
something like that.
Yeah, very short period of time, and something that every single person is completely relying on.
You can't imagine life without it.
Yeah. So sci-fi almost gives a map for the future, like what people want to build. These are possibilities, and then kind of just takes people to go out and try and make it happen.
Yeah, it is. I think also I think this is why I think it's technology is a good place to be. If folks are thinking about where to be career-wise, technology is a great place. If you look at just what today are the most valuable companies in the world, as you and I both folks that are building companies, you just go down the list, it's tech companies all at the top, and most of this is technology that just didn't exist. A lot of it just didn't exist when I was born, or was invented within the last few decades. Many of it, Microsoft, Apple, Amazon, Alphabet / Google, Facebook, Alibaba. These are the world's most valuable companies. And 50 years ago, you could not have imagined what these companies were doing because the technology just didn't exist. So I think that the same thing is likely going to be true of the future, that the products and technologies that are going to exist 20, 30 years from now, and you and I are going to live to see it, they're going to be things that are difficult for us to even imagine today. And the companies that are going to be the most valuable companies in the world might be ones that we've never heard of and that haven't even been founded yet. And they're going to be worth, $1 trillion, $2 trillion.
Yeah, that's really interesting. So going back to that third book, where do you want to start? I haven't read it, so you can lay the groundwork, and we can go back and forth on it.
Okay, I'll give you the groundwork. You got to read the book to really get it all. I'll give you enough to hopefully be enticing. So it's written by this guy Gary Drescher, and the title "Good and Real" is like the two things he's trying to investigate in this book is really good and real. What is and what is, and good, what it should be. What should be and what is. Those are the two main things he's trying to investigate. And what he claims is that we can actually achieve a logical, even a mathematical foundation for both questions, which is a somewhat shocking claim because most people would not at all believe that morality or ethics could possibly have a mathematical basis that could actually be discerned by humans. That's just a radical idea. But he thinks that and after reading his book and thinking about it a lot, I'm actually somewhat convinced that that Western thought threw in the towel too soon on trying to really drill down to the very core of reality and the very core of morality in order to try to find a rational, logical basis. And that's part of what's wonderful about Western thought is, the Enlightenment and where the U.S. comes from, and the idea that we can actually figure out ways to improve ourselves and improve our society and create things that are going to be better for everyone. That process, which science has been pushing along for centuries, he thinks is going to eventually be able to crack this code.
Wow. All right, so I got some questions. I guess the initial question, and it might be too much to explain. It might just be that I have to read the book. So I guess if you're getting down to the very crux of that jump, so on the good part of this, on the good part, when he's talking about how you can mathematically make decisions on there's a mathematical basis within how you can tie morality to what decision should be made. How are you making the leap or how is he making the leap and arguing the leap that those are tied? The mathematics and then the morality, and how you can derive morality from some sort of mathematics or basis in physics. I guess that's really what I'm wondering. How did that jump get made?
I agree. I know, and that's what you got to read the book for, because it's not easy.
I guess I got to read the book.
The core question is why would you think that there could be a mathematical basis for morality? It's extremely non-obvious. But I'll just give you a simple example. You're familiar with the prisoner's dilemma?
Yeah.
Okay, so
you can outline it though, just in case someone hasn't heard of the prisoner's dilemma.
Okay, so yeah, the formulation of the prisoner's dilemma that I really like goes like this. It says, Will, you and I are going to be in separate rooms, and each of us has to decide either we are going to get $1 ourselves, or we can have the other person get $2. So if both of us choose the selfish option, we're both going to walk away with $1. If both of us decide to be nice and give the other person $2, we both walk away with $2. But if I defect and I keep $1 for myself, and you were choosing to cooperate and you chose to give me $2, I'm going to get $3, you're going to get nothing, right? So you cooperated, I defected, you ended up screwed, and I got $3. So that's the prisoner's dilemma. Now, the reason why this is interesting from a game theory standpoint is that the dominant strategy is to defect. Defecting dominates cooperating, and that's a technical term. What that means is, if I knew that you were going to defect and keep $1 for yourself, then my options, if I defect and keep $1, then I get $1. If I cooperate, I get nothing, right? And you get $3. So it's better for me if I defect, right? Now, if I knew you were going to cooperate and give me the $2, then my two options, either I can defect and I end up with 3, or I cooperate and I end up with 2. So it's still better for me to defect. So that logic would say, maybe I should just always defect. That's what it means for defecting to be a dominant strategy. Defecting dominates cooperation is that regardless of what the other person does, if you condition on what the other person does, regardless of, if you say that let's say we know they're cooperating and we know they're defecting, you defecting will still end up with you getting more money. So it seems like rational strategy in this game would be to always defect. But if everyone always defected, everyone gets $1, and if everyone did the quote unquote irrational thing and cooperated, then everyone would get $2, right? So the technical term there is that the Nash equilibrium does not lie on the Pareto frontier. That is what makes this game interesting. But you can get stuck in this situation where everyone's always defecting, and to a certain extent, this is a model of what happens in the world where everyone is fighting over shared resources. There's a tragedy of the commons. We're building up our nuclear arsenals. We're going to war with other countries, and there's a lot of defecting happening. And if there could be more coordination and cooperating in the world, potentially everyone could win. But it's very difficult to actually make that happen. So here's an interesting twist on the prisoner's dilemma is, imagine if you were playing prisoner's dilemma against your clone. So let's say I've got your clone in the other room, okay? This is an exact clone of you. This is a person who atom for atom is the same as you, Will. Now, you have to decide if you're going to cooperate or defect. What do you do?
I would do whatever I was. Does the clone know that I'm also that I'm the one in the other room?
The clone knows that he's also playing against his clone, just like how you know that you're playing against your clone.
Okay. In that case, I would give the money.
You give him the money, the $2?
Yeah.
That's right. And why would you do that?
Because I know that he's going to give me the money and I'm going to give him the money.
Right. Yeah, because if that's your thought process, then if this person is actually atom for atom identical to you, then that's probably going to be their thought process too, and then you'll cooperate.
Yeah. That is so interesting. I've never had someone have me do that thought experiment.
Yeah, by the way, I know these twins, and we actually did this with them, and I think they ended up defecting. Very foolish. So both of them, each one thought, I'm going to go trick the other one, right?
Yeah.
Of course, they both think that. So yeah, you cooperate with the clone. That makes complete sense. And so what's going on there is that, you and your clone, you're two humans, but because you're clones, because I've said that you're clones, you are almost certainly going to think in exactly the same way. I've said you're atom for atom identical, so you're almost certainly going to think in exactly the same way. And so you can pretty safely assume that if you cooperate, that just as you are thinking in your own head, okay, I'm going to decide I'm going to cooperate, your clone is probably thinking in his head exactly the same thing. Yeah, I'm going to also cooperate, right? Yeah. And if you thought, let me try to trick him, because he's going to think that we're going to cooperate, but then I'm going to actually defect, right? if you try that, he's probably thinking exactly the same thing, and then you're both going to defect, right?
Yeah.
And it's going to be a bad situation. So a way that this starts to lead you towards an ethical basis to morality is to see that there's this perfect correlation between you and your clone. But let's say instead of playing against a clone, you were playing against another human, like me. You and I are not clones, but we do have a lot in common. You know, we're both guys living in the West, some of the same interests in crypto, and clearly on the same wavelength on many things. And so while the correlation between what you will play in the prisoner's dilemma and what I will play, it's not 100%. It's not one. It's not a correlation of one the way it is if you're playing against your clone, but it's also not zero, right? It's not the same as if I said you're playing against an alien and you have no understanding of the alien, or you're playing against this computer algorithm and I'm not telling you anything about the computer algorithm is going to do, right? There the correlation might be zero. But if I said you're playing against a random human on planet Earth, well, you have a little bit in common with a random human on planet Earth, but not that much. But if you said you're playing against me, you've got a lot more in common with me. And if I said if you're playing against your non-identical twin brother, that would be a lot more correlation, but still not 100%, right? If I said you're playing against your exact atom-for-atom clone, that's 100% correlation. And so depending on what that correlation is, the same logic can also apply, where even if you're completely selfish and you don't care about helping me, you just want to get the most thing for yourself, the most money for yourself. If you're playing against a clone, you can see how logically, even if you're completely selfish, you still should cooperate because you know that they're going to do what you're going to do. The same applies. The same applies to a more limited extent if you're playing against someone whom you have some things in common with, like even if you're just both humans, but are not clones with. There's still some correlation between what you will do and what I will do. And so it really is the case that if you and I are playing the prisoner's dilemma, and if you go in your room and you start thinking to yourself, "Ooh, I think I'm going to trick him, and he's going to cooperate, and I'm going to defect, and he won't see this coming," right? There really is a decent probability that if that's what you're thinking, that I'm thinking exactly the same thing in my room, and that's going to come out, and we're both going to defect, just like with your clone. You do that and both defect. So that's just a little teaser to give you a sense of how you can how you can derive sort of a game theoretic and mathematical basis to what seems like altruistic behavior between people, depending upon how much they have in common with each other.
Yeah. Well, after hearing that, I'm definitely going to have to check out the book. It's almost like we just ran like a sponsorship for that book, because I'm sure that anyone who was listening to that is going to want to go and read this book now, because that is fascinating. I've never thought about it that way.
It's truly an excellent book. I really recommend it. I don't get paid by Gary Drescher to advertise his book.
Yeah. I'm sure that we could dive in on this for much longer, and I do have some other questions about this. But just before we wrap up, are there any places online that anyone who's listening, they can connect with you or the company or any other places that you think that they should check out?
Yeah, folks should they can follow me on Twitter at Rafael Cosman, RafaelCosman, and also at TrustToken, our company. And we've got some exciting announcements coming out soon about TrueFi and other things that we're developing, and would love to hear folks' thoughts about them.
Yeah, definitely. Well, man, this was a lot of fun. It was incredible just hearing you talk through that prisoner's dilemma. It's almost like you had practiced it beforehand. That's how good it was. Like, it was just laid out like step by step by step. That was awesome. Thanks again for coming on. We'll have to do this again sometime soon.
My pleasure. Would love to. Thanks for having me on.
Of course. Thank you for listening to this episode of the Sazmining Podcast. Be sure to follow us on social media and YouTube for the latest updates and previews of upcoming episodes. Full episodes and transcripts can be found on sazmining.com every Thursday. If you want to hear us interview a particular guest on a future episode, please reach out to us at podcast@sazmining.com.